Let's talk about C3.ai, an artificial intelligence software company that is getting a lot of attention, especially because the earnings report is coming up soon. They provide AI solutions for big businesses, and there's a lot of anticipation around how they'll perform.
It's a company to watch for sure. Last quarter, their revenue was $72.1 million. That's a 20.5% increase from the year before. And they actually did better than analysts thought they would in terms of earnings before interest, taxes, depreciation, and amortization. EBITDA, as it's called. That's a really important way to look at a company's operating profitability. Their billings also exceeded expectations, which suggests their revenue is going to be strong in the future.
That's a pretty big increase in revenue.
Yeah.
What are analysts thinking for this quarter?
Analysts are predicting they'll keep growing this quarter. They're expecting revenue to hit $91.02 million, which would be a 24.3% increase year over year. That projected growth rate is even higher than the 17.3% they had in the same quarter last year. But they're also predicting an adjusted loss of 19.16 cents per share. What do you think about that?
It's interesting. Revenue's going up, but they're still predicting a loss per share. What do you think that says about C3.ai's strategy?
That's a really good question. It could mean they're focusing on long-term growth and market share more than immediate profitability. That's a pretty common strategy for companies in new and fast-changing tech sectors. It's like they're betting on the future of AI. The big question is whether they can turn this growth into sustainable earnings in the long run. How do you think their performance measures up to other companies in data infrastructure?
That's a good point. Companies like Elastic and Confluent, who also work in the data infrastructure segment, they've already released their Q3 results. Elastic did better than analysts expected, reporting a 17.6% year-on-year revenue increase. And Confluent also beat estimates with a 25% revenue increase. Both companies saw their stock prices go up after they announced these positive results. Do you think the overall growth in this sector changes how we should look at C3.ai's performance?
The data infrastructure segment is doing well overall. It's seen an average increase of 8.1% over the last month. But what's really amazing is that C3.ai has done a way better than the average for the sector. They've seen a 46.9% increase in the same period. This shows they're not just riding the wave of industry growth, they're actually taking market share and doing better than the overall market trends. What do you think is driving this incredible performance?
That's a big difference. Do you think the excitement around generative AI could be playing a role? It seems like it's going to completely change the way businesses work.
Generative AI is definitely a factor. Companies like NVIDIA and AMD, who mostly focus on semiconductors, they're getting a lot of attention. But C3.ai is different. They're providing AI solutions directly to businesses. This puts them in a unique position to benefit from the increasing use of these game-changing technologies. Analysts have set an average price target of $25.55 for C3.ai, which is interesting because their share price is currently $41.40.
What do you think about that difference? That's a pretty big difference. Why do you think the analyst target and the current share price are so far apart?
It's hard to say for sure. It probably reflects how complicated the market is and all the unknowns that come with new fields like AI. It's possible some analysts are being more careful. They might be factoring in potential risks and challenges, while the current share price might show how high expectations are and how excited people are about AI's potential and the important role C3.ai has in this field. It'll be interesting to see how this all plays out as the world of AI continues to change.
It is a dynamic field for sure. C3.ai's upcoming earnings report should give us more information about how they are doing and what that means for the wider adoption of AI in the business world. I'm really interested to see if their actual results match what analysts are predicting and what effect that could have on their stock price.
I am too. Their strong financial performance, the optimistic growth projections, and the fact that AI is becoming more and more important. All these things make this a very compelling story to follow. The difference between the analyst price target and the current share price makes it even more interesting. It will be fascinating to see how C3.ai handles the changing world of enterprise AI in the coming months and years.
It's definitely a company to keep an eye on.
I agree.
Thanks for joining me today to talk about C3.ai. I'm sure our listeners will appreciate these insights.
Thanks for having me.